Hey, what's up? It's Emilio DiSpirito, and this is the Wealth Architect Podcast. I'm so excited to be here with you each and every single week. My team and I have hand-selected our guests to come on the program to talk about how to build wealth financially, mentally, physically, spiritually, right? There's so much that goes into building a lifestyle full of wealth, and we hope that this content really reaches you, not only in your brain, but in your heart, and that you could do something with this. So thank you so much for tuning in. God bless you, and we're going to have a great show. Hey, a special thank you to our sponsor, Annie Mac Home Mortgage, whose Cash to Keys product is disrupting the industry. Sick and tired of finding the perfect home, not having your offer selected? I got to tell you, it happens all the time. With Cash to Keys, Annie Mac gives sellers a cash guarantee for each of their buyers' offers. Stop bidding and hoping. Instead, bid with Annie Mac and bid with confidence. Don't just bid, but win. Annie Mac Mortgage. Do you live in Rhode Island, Massachusetts, and Connecticut, and you're thinking about moving? Well, the worst thing you can do is ask your friends to come help you, because then guess what? You owe them a favor. Never mind, you're going to be spending a ton of money on beer and pizza, and stuff is going to get broken. It sucks. Call our friends GMET's Moving and Storage. They're going to be able to move you, especially in this marketplace, but they can actually ship your stuff around the world and move you with their crew of dedicated professionals anywhere in the United States. Go ahead and Google GMET's Moving and Storage, and they'll help you out today. Welcome to another episode of the Wealth Architect Podcast. I'm Emilio DiSpirito, and I'm excited to have you here today. We've got a great topic we're going to be covering, and it's industrial triple net leases, okay? I'm excited to learn about this. It's not something I know a ton about, and that's why I brought on the expert here, Amanda Brown with MAG Capital. She is known as an industry expert, and I strongly suggest, I'll say her website again as we go, but you check her website out, magcp.com. Again, magcp.com. Check it out. You can connect with her there, and she can answer all of your questions and guide you through. So, Amanda, welcome to the Wealth Architect.
Thank you so much for inviting me.
You're welcome. I'm so excited to have you here because there's so many ways to accumulate wealth, especially here in the United States. And I've gotten to meet so many wonderful people and professionals over the network, and I'm glad to add you to our network. And I'm happy to have you on. So, Amanda, can you tell me, just give our audience a brief idea exactly of who you are, where you're from, and what got you into this business?
So my name is Amanda Brown. I'm a director of capital markets for MAG Capital Partners. We are a commercial real estate investment firm. We focus on industrial net lease real estate. We have industrial fund. We also have some single asset deals, but we are based in Dallas. I actually live in Laguna Beach, California.
Nice.
We are based in Dallas. And we, our principals got together in 2015, started investing in, friends and family and in real estate, and then transitioned pretty quickly to industrial. So we've been doing industrial for just about 10 years. We've grown to about $1.5 billion in assets under management. And the principals are Dax Mitchell and Andrew G. The Dax comes from the commercial brokerage side, and Andrew comes from the commercial appraisal side. So they combine their expertise, and we have grown pretty exponentially and have a very strong specialty in single tenant net lease industrial.
Wow. So these leases that you have here, and there's a fund. So you're holding these funds. Is it more like a syndication almost, or how exactly does this work?
Yeah, you can look at it like that. We buy, broker, manage all of our own deals. We do everything in-house. We have a credit team, an acquisitions team. We have a construction manager on staff. We have a capital markets team. We have a fully performing finance team. So we have grown, pretty substantially. But yes, we acquire real estate from companies that have been in business, maybe 30 to 50 years, not mom and pop. Maybe they're family owned, and they are selling their real estate to free up capital back to their business to grow. And so we are acquiring the real estate. We, put long-term leases. So it's all 15 to 20-year leases, and they're all absolute triple net leases, meaning that the tenant pays everything. Pay for the maintenance, upkeep, taxes, building itself, the land around it. And so we have a fully performing tenant from day one, and we have no expenses.
Wow, that's beautiful.
Pretty much, but that's the model.
Okay, so there's a couple people that are listening to this that may benefit from it. So if you own industrial land, industrial and anything, right? Industrial complexes and buildings, and you want somebody else to manage them, take them over, and you want to lease it to them, you're buying these or you're leasing it from them?
No, we're buying the real estate.
Okay.
We are acquiring real estate from companies that want to stay in their space, right? Vacancy rates are so low right now that our tenants are want to stay in their space. Plus, they built out their location. They've been there forever. They built it out to fit their business. So they're not motivated to leave. They're not motivated to go to other locations. And so we're able to acquire the real estate. We don't manage the businesses. We just hold the real estate.
Wow, that's fantastic. Okay. So, and industrial only is what you're doing. You're only looking for that.
We are.
Okay, great.
Our industrial fund 3, which is the current fund that we have, is all single tenant net lease industrial. So that is our expertise.
Why industrial only? I mean, it could be commercial, it could be retail. Why industrial? What's so attractive?
Honestly, we don't chase shiny things. We do what we do best, and we've grown in that space. We have an expertise in single tenant net lease industrial, and that's what we're focusing on. There's a lot of other asset classes that'll make you money. There's a lot of other different types of commercial real estate you can invest in, but we focus solely on this space, and that's what we do best.
So, and I know you're in Laguna Beach, California, and you guys are out of Texas, and land is so much more plentiful out west. I know maybe not so much in California, but definitely in Texas and several other states. Here in Rhode Island, right, and in the Northeast, there is not a lot of land left here to be developed, and industrial zoning is some of the most valuable land that you can find. Can you talk about what some of like the applications of industrial are so that our listeners can get more of a feel of what type of businesses operate in those spaces?
You can look at industrial a lot of different ways, right? Just like any other asset class. So you have, the new construction, class A, it's going to be more expensive, obviously, because it's new construction. We have a lot of that out here in California, especially inland, where there's a lot more space, right? Just like you said. We focus more on the single tenant net lease industrial. You also have multi-tenant industrial, which we do have some investments within our company that is multi-tenant industrial. And multi-tenant industrial has more of a value add component to it. You're re-tenanting, you're doing some CapEx work, you're trying to add value to that space, and then you are bringing in, multiple different tenants, almost like a multifamily. What we're doing with the single tenant is, we're just acquiring the real estate, tenants stay in their place. We're not re-tenanting. That's part of the strategy, and we're just bringing in real estate like that. There's different areas where you can buy real estate. Obviously, you're mostly going to see a majority of industrial from Texas up the Midwest and over the Rust Belt. That's kind of the corridor. You want to have access to rail lines and to shipyards and to transportation corridors. So that's where a lot of you'll see most of the industrial.
Got it. Now, do you do anything with solar on the industrial land?
There is opportunities. Yeah, you can, because, obviously with solar, you're adding solar to the land. We don't particularly have any currently right now where we just have, a solar field, like what you see out here in California. Yeah. We have these large solar fields. But there is opportunities to put solar on buildings, and, that's, obviously a great opportunity.
The reason why I ask, and it might be different state to state with zoning and different, what you can do where, but here in Rhode Island, you have to have an industrial type of zoning to put solar. You can't do it in many other areas or zoning. So I was just curious if you're doing any of that, or if you see any real upside in investment. It sounds like, there could be, but it's not an area that you do.
Yeah, it's really on the tenant. And that's, that's
sure.
for them to decide how they want to have the solar.
Sure. Yeah. So they could add that if they want to do as a tenant. So pretty much when you're taking over that land as a tenant for the 15 or 20 years as triple net, it's almost as if you own the property. You have to maintain it, you have to pay all the bills, you have to do all of that. And that's a talk about a wonderful investment to own something like that. It's
Yeah.
brilliant. Yeah.
We own the building itself and land around it, or the
Hmm.
tenant has to manage and maintain that, but we own the real estate, right? It's a shield against inflation, really, is what it is, because we have tenants that are paying um, for all of the expenses. But really, what we're looking at for us is U.S. manufacturing, and so we have all companies that are American manufacturing, very little exposure to tariffs or to outside countries. And there, post COVID, also a lot of the reason why industrial is what it is now is a lot to do with post COVID world where we had to bring a lot of our goods closer to home, right? I live here in Southern California. We had a ton of ships right out here in the ocean that we saw that were just sitting there waiting to bring all the goods in. Everybody's waiting for their stuff, right? And so that really drew and grew this industrial space pretty significantly. It was popular, already had obviously a draw, but that really is where things really started to boom, is when people realized that they needed to bring their goods closer to home and have less reliance on shipping or housing their parts and pieces elsewhere.
That's amazing. And how many years has your company been at this?
About 10.
About 10 years. Okay. So they say after 5 years, you are an expert in whatever it is that you've been doing for those 5 years. So 10 years now, finding and funding and putting together deals in the triple net space for industrial land, buildings, complexes. That's amazing. And you said that there's funds that you can have, like if somebody is listening to this and they want to invest some money into the funds, right? Can you explain how that works? And, is there a minimum buy-in or?
Yeah, so we have our Industrial Fund 3 currently right now that we have available for investors. It's
Hmm.
accredited investors. We are offering 4 tiers of returns, which I can send information and provide more details. But a minimum investment for we have two parallel funds. We have a direct and a REIT fund, but we minimum is 75, and that we have 4 tiers of investments that goes up from there depending on how much the investor wants to invest. We're delivering between 8 to 10% preferred returns
Hmm.
with a 75-25 split or 80-20 split on an exit.
And how long to exit? 15 years, 15, 20 years?
No, 5 to 6 years, so we'll be exited within 6 years.
Oh, wow. Okay. 5 to 6 years.
Yeah, so it's a whole time. We want to make sure that we are delivering investments, and really, the benefit of this investment is it's a cash flowing investment.
Mm.
You're getting returns from the first quarter of your investment, so it's all cash flow.
Wow. So let's say if somebody is doing a 1031 exchange, okay, they have rental properties, they're doing a 1031 exchange, and they don't identify what they need to, and they're ready to go. Can they put it into the REIT?
No, that's so with 1031s, it's not a like kind exchange for these
Yeah.
types of investments for passive. We can always talk to somebody who has a 1031. We have some options and
Hmm.
opportunities, but really what it comes down to is just the 1031. It's not a like kind exchange.
The reason why I ask is because, like I myself, I use 1031, and I have several clients that use 1031s, and there's some times where they run into a wall, and they're like, I can't identify something that makes sense, and if there would be an instrument to put that money in somewhere else or move it along, but I always tell them, well, it's better off if even if you're paying taxes on that money to put it somewhere in a fund or in a REIT or something, a real estate investment trust, instead of just pop it in your bank account where it's going to sit and you're going to lose money with inflation. Hedge the inflation by doing that.
Most definitely, for sure. Yeah, these investments are passive investments. I talk to people all the time that are determining whether they're going to be more active investors or passive investors. And with the active investor, you have a lot of benefits. You own the real estate. You have more of a say of what happens with that real estate. You're able to maybe get some higher returns depending on where you are. It just all depends. But really, what you're dealing with is that typical tenants and toilets thing, right? With this, you're not. You invest your money. Really, it comes down to trusting the sponsor, and we have a very strong track record, and that's what we stand on. We want to make sure that our investors trust us. We've built up a long track record. We have, great return history. We, we have a lot of repeat investors, and that's for a reason, because we really make sure that we take care of our investors. We really make sure that we, maintain the relationship, that we communicate, and that's what goes into it. And I think, that's what any of your listeners who are trying to determine if this is, a way to go for their investment. I would say you need to get to know the sponsor, and you need to be able to trust them, and to understand who they are, and what their ultimate responsibility is.
Well, I look at it as Amanda. I look at it as, if you have repeat clients, okay, they've obviously have made money with you. If you've been doing this for 10 years in this space, it's a niche thing. You're not doing something wrong, or you're not producing if you're in it for 10 years. You can't be in anything for 10 years and do something like that. So I think that's huge, and that really speaks to me. And I love this, because now this is just something extra as far as value that I can add to my network. I know a lot of people that are looking for places to invest. Some people want to invest in, self-storage. Some people want to invest in flipping homes. Some people say, hey, you know what? I don't want to deal with any of it. I want something that's just going to work for me. Let's talk about your demographics. What does the demographic look like on average, right? I'm sure it's all over the place, but really, who is like your targeted investor? Age, where do they come from? What do they like?
There isn't one
No?
person, right? It's so interesting. It's I think a lot of this comes down to education, to be very honest. There's so many people that don't even know that this type of investment exists, right? And it's educating people and having them understand, what type of returns, or what the returns look like, or just, the details of this type of investment. It's not difficult. If people think industrial, you have to know more, because, multifamily is so much closer to their home, and it's just an easier jump. Industrial is just another asset class. But we grew from friends and family investments, right? We've grown and built on that base of investor. We have, many different types of investors, but we grew from that retail base, the typical everyday investor, and that's really truly our core base of investors is everybody, right? You, anybody. I invest, right? It's anybody. Obviously, as you grow, you get more into institutional groups, family offices, other types of larger types of investors, and that comes with a track record, and that comes from time and relationships. But really, we have such a varied type of investor. That's the beauty of it, right? That anybody really.
I figured I figured maybe somebody maybe in their 50s, their 60s, already like kind of fully established, and they're just like, hey, let's let my money work for me. I'm printing money with my other businesses. Let's just let the money work.
Yes, there is a certain element of that, because that's time and just, understanding how money works, and understanding how investments work over time. And there are a lot of groups that will educate you on that. To be very, very honest, we have a larger group of young, 20 to 30 somethings that are learning about investments. And I think that's a benefit of the internet age, of a benefit of social media, podcasts, TikTok, everything. It all feeds into the knowledge base that is going to help people understand, how to grow your money, and different ways to grow your money. There's so many different, ways to grow in real estate. and especially within commercial real estate. And that's, like I said, I really attribute that to education and people being open to wanting to educate themselves and learn new ways to invest.
Absolutely. So we're talking with Amanda Brown, and she's a director at Mag Capital Partners, and they focus on industrial triple net spaces. And they have a fund that we're talking about right now. It's the Industrial Fund 3, she called it, right? Is that right?
Correct.
And awesome. And we're talking about who would be a good fit as far as an investor for that. But it sounds like pretty much anybody with some income that's just sitting there, why not make it passive? Why not collect interest off of it? Why not collect? What were you going to say, Amanda?
The only thing that needs to be, you just need to be an accredited investor. And
what does that mean?
So there's, to become accredited, you have to either make $200,000 a year as an individual, $300,000 as a couple, or you need to have $1 million in assets, not including your primary residence. So, that's a level that a lot of people are trying to reach through investments. For us, for our group, we bring in only accredited investors. So somebody who has, already kind of gotten to that level, but that's, kind of what people are trying to build on. They're trying to build up to that point.
Sure. Well, how do you verify that? Do you look for tax returns, or do they sign an affidavit?
Yeah, they submit a document that states from their, wealth advisor, their, whoever is managing their money, their tax manager, whoever is managing their money can verify that and then can submit that letter to us.
It's a pretty easy thing to do then. So the application process is probably pretty quick. Like if I want to invest in the Industrial Fund 3, like right now, like how long would that take me to get started? Would it be a week, a month, 2 months?
I can get you on right now. Let's do it.
In a day. Let's go. Let's go.
Let's do it right now. No, our process is very, very simple. Honestly, it's, a majority of the time is due diligence for investors, learning about, the details about the investment. We have, all of the documents that we can share, OMs, the subscription documents, everything, everything that they can do for their own due diligence, which, is an individual process, whatever is going to make you feel comfortable about not only the investment itself, but us as a group. And so, that process is probably that's the most amount of time, and that's all individual, right? However long it takes for you to vet out the deal and to feel comfortable about it. Once you are ready to invest, it takes no time whatsoever. We have a investor portal that you can jump into. We have subscription documents you can sign immediately, and then you can fund or wire within the same day.
That's awesome. And you can keep adding to it too, I would imagine. You can keep adding to the fund.
Correct. Yeah, we do. We have investors that will invest, multiple times into an investment. We also will offer to investors over time, kind of some side deals. We have some other, we've gotten a little bit into the multi-tenant industrials. We have those types of investments that will come around every once in a while. So we do offer other opportunities to build on our relationship and to help our investors to build their wealth.
That's amazing. Let's walk our listeners through, let's just use a nice round number. Okay. Just walk them through it. $100,000 invested. Okay. Tell me what happens to that $100,000 over a year. You'd get about an 8 to 10% return, you said?
Correct. Yeah. You get an 8 to 10% return. You, from the first quarter of your investment, you are receiving distributions.
So quarterly distributions.
Quarterly distributions for the fund. We have other types of investments where we have some monthly, but those come around, every once in a while. And that's just another opportunity to kind of, determine what type of investments you want. But with the fund itself, we're doing quarterly distributions. You're receiving a distribution all the way through. We're in our acquisition period right now. So we opened this fund in January. And we are acquiring properties consistently to fill up the fund. We'll have, let's say about 30 properties in the fund. We're raising $200 to $250 million. We can go up to $500 million. So this fund will be quite large, and it's all going to be single tenant net lease industrial. And so over that period of time, you're collecting, distributions. We're adding 2 to 3% rent bumps each year. So that's kind of what gets distributed out. And
Love
then
that.
we're growing our investments. We're also paying down our fixed rate debt. So all of those things are happening on our side. We then will start looking at exiting, and we can look at different exit scenarios. And then upon exit, then you will receive a waterfall depending on what that is and what tier you come in on.
All right. So like, let's just say, so somebody investing $100,000, what in the waterfall, explain what the waterfall is. I'm a layman. I don't know that terminology.
Depending on how much all of the properties are selling for, right? The
Okay.
equity, the total equity will then get distributed out and get, split between all investors. So we're looking at this fund is about, just under a 2 times multiple for investors.
So give me a number here. That 100,000 over the course of the 5 years. What with the waterfall and all of that? I think I'm getting the lingo down. What are you looking at to pull that out? You got the 8%, 10% over the years, which is nice. Call it 50K that's coming in over the years, and then the waterfall would be
Yeah, if we're looking at like let's say a one nine
ballpark.
x multiple, right?
Yeah,
Then
yeah.
you're receiving your $100,000 back and you're getting $90,000. So that's what a multiple means.
Yep. Got it. Cool. Well, that's awesome. That's
Yeah.
great. The only other place that you're going to get more than that is if you're going out and you're finding the deals in real estate, managing all of that, which, by the way, isn't always a great use of somebody's time. Okay. Not everybody has the expertise to find the deals, to work the deals, to get the tenants in place. That's a whole business in itself. Or if you're playing the stock market and you know what you're doing, but so many people like myself don't. Like, I'll put stuff in stocks. I'll listen to a couple of friends. They'll say, do this, do that, put it in. And then, it's just like, well, I just lost 10, 15 grand, which I know is peanuts compared to other stuff, but it's not something I specialize in, right? And I know a lot of our listeners are like looking for instruments that'll make money for them while they sleep. And this is one of the best ways to build wealth, is to link up with the experts in something like this, industrial triple net. I think that's amazing, Amanda. And I want to give out your website again. It's magcp.com. You can connect with Amanda and her team. Again, magcp.com. That's Mag Capital Partners. Amanda, are there any situations where, you had a fund and the fund went south, it went sour?
No, this is our third fund. We opened our first fund in 2022. Prior to that, we had all of these investments single asset and realized pretty quickly that this was a very popular type of investment, right? We had a lot of investors want to come into this fund, and then we realized we had our acquisitions team, like I said, was working really hard, and we had a lot of properties. So 2022,
Hmm.
we opened our first fund. That one closed very quickly, all single tenant net lease industrial. We then opened Fund 2 in February 2023. Equally as popular, but the investing environment changed obviously in
Hmm.
2023 for everybody. So we ended up raising a significant amount of money, or we hit our goal and went over our goal for that fund. But it just took a little bit longer. People were a little more cautious with their money. Right now, in this environment, we are consistently bringing in investors, and people are being smart with their money, and they're allocating money where they feel like they can trust sponsors, and that's what we aspire to be.
Yeah, that's everything. The trust is absolutely everything. I just had a sales meeting with all the advisors here at my brokerage, and I started that. I said, we need to lead with trust.
100%.
Everything you do, the way you speak, what you hand people, your reputation, everything needs to speak about that trust, because people want to work with humans. They want to work with people that they know are reliable, competent, and that they can trust. And that's part of the reason why we asked you to come on this podcast, because we're looking for various experts in various fields. And if you're listening to this and you do something that's outside of the box that you feel can add value, like Amanda Brown here with Mag Capital Partners has done for us today, we want to hear from you. Absolutely. The Wealth Architect podcast with Emilio DiSpirito. Google it. You can find us everywhere. Amanda, one other question I had for you before we end the segment is I'm really intrigued by the manufacturing that's happening here in the United States, okay? And you're seeing it firsthand. You're going out buying more properties. Is your team buying more properties now in light of manufacturing because of the current administration's dealings, or was that already happening beforehand?
That's a really good question. No, we already we have been acquiring U.S. manufacturing, industrial, real estate for, like I said, for almost over 10 years. So this is a space that we've already been in. This is where we
Hmm.
have built our expertise, and like I said, we don't chase shiny things.
No.
We do what we do best, and we've been in this space, and we have brokers that come to us directly and trust us because we are able to close real estate. We have
Hmm.
private equity groups that will come to us and sell us real estate because they acquire these businesses, but their business model is not to own real estate. So
How important is that policy from, from each administration? Because if there's some administrations that are heavy on manufacturing, heavy bringing in that, and then all
yeah.
of a sudden it switches over to some other guy or girl that's like, hey, I don't want to focus on that. We want to outsource everything again. That obviously could change some things. So to me, and it's a loaded question here, but to me, I'm looking at it as, since COVID, I hear you, all that manufacturing coming in, we seem to have an administration that wants to bring more manufacturing in, wants to grow that sector of the economy, right? I think there's trajectory here for at least another 4 or 5 years.
Most definitely, for sure. And we've acquired real estate under multiple administrations, right?
Hmm.
It's not, an administration specific, purchase, but, yes, the focus on U.S. manufacturing, I think has, brought more attention to this space, right? More
Yeah.
investors are maybe, coming to us because, they've read more about industrial. They know that there's a focus on U.S. manufacturing. So I think it helps us, and I think about it obviously from a capital market side because that's the majority of what I'm dealing with. But I think it just has shined a light on how important U.S. manufacturing is. The companies
Sure.
that that we're working with are successful. They've been in
Hmm.
business 30 to 50 years. They're not mom and pop. Maybe they're family owned. They have been in this business for a long time. And I think it's really interesting, to be honest, when you look on the side of the road and you see these industrial buildings, it's just four
Hmm.
walls of roof, right? You can do anything inside of
That's right.
these buildings, and it's fascinating to learn more about the business itself. It truly
Hmm.
is. Because you see these buildings and you don't realize what's happening inside, and there's a multi-million-dollar business that's functioning, and they're like making a widget for
Yeah.
aerospace. They're just doing something so so small and a part of a larger an industry that you just never would have even imagined.
It's truly amazing. I was reading my son this book about how to make a pencil, and there's not one person in the world that can make a pencil alone.
Really.
Yeah, not one person in the world that can make a pencil alone, because they walk you through the whole process of where the materials are mined, how it comes in, how all of the different components are put together in different facilities and then added to one and then distributed. And it's amazing what we do here. And all of it starts with having the space. And I love it because not only are you investing in in a wonderful passive income application, I guess you could say, right?
Mhm.
But you're also supporting the country. You're supporting manufacturing. So, Amanda, fascinating topic. Thank you so much. I'm so glad that we were able to get you to come on the podcast. And I want to tell everybody again, Amanda Brown, director of Capital Partners. And you can reach her at magcp.com. Again, magcp.com. Go ahead and talk with her about, investing. See if it's for you.
Thank you so much for having me. I really enjoy myself.
You're welcome, Amanda. Thank you so much. And we'll see you again, I hope. Have a great one.
Thank you. You too.
You're welcome. Awesome. Do you currently own an abundance of multifamily properties? Are you tired of working with property management companies that just continue to drop the ball and disappoint you? Why don't you start your own franchise? Go ahead and contact our friends at Nexus Property Management to see how their proprietary information and systems and marketing can work for you. The success that they have had all over the country is unbelievable. Check them out, Nexus Property Management, and go ahead and let them know you heard it here on The Wealth Architect. All right, welcome back to the Wealth Architect podcast. I'm Emilio DiSpirito. This is season 2, episode number 7, segment B. And we've got a very special guest here today. It's Scott Cutter, and he's with To Costa Rica. He's running a real estate company, real estate brokerage down there, and they've got over 60 agents, several different offices out in the lovely, lovely country of Costa Rica. And he's connected through us through Realm Global, which is literally the top of the top tier professionals in luxury real estate across the world. The top 1% of agents are welcomed into this wonderful collaborative group. And we get to work together and we get to refer business back and forth. But more importantly, we get to learn about each other's marketplaces, about our niches, and we get to grow our businesses together. So I'd like to thank you, Scott Cutter, for jumping on with us today. Pleasure to meet you, Scott.
Yeah, it's a pleasure to meet you. Honored to be on the Wealth Architect podcast. And again, talking about Realm, it's just such an amazing network, best practices, trends. Ultimately, we're all here to take care of and service our clients, buyers, and sellers' needs. And there's no better way to do that than make sure that you're always on the top of your game, learning trends in other areas, sharing best practices. So it's been a very fruitful participation in Realm. We're one of their founding members, and I try to participate as much as I can.
No wonder why they sent you. Did they tell you to say that? Because that was absolutely perfect. They're gonna love that.
I am on the payroll.
I love it. That was so perfectly said. But I couldn't agree more, Scott. And it's great. We've got 18 different countries involved here. We have agents, advisors from all over the place, different walks of life, and in the different marketplaces that are specializing in different things. And they get to bring their way of doing things to the table. And I don't know about you, but every single time that we have meetups online or in person, the information that we get to learn and share back to our communities or to our clients or to our agents that work with us or under us, is just invaluable. Absolutely beautiful.
Yeah, no, you're right. It's all about connective tissue as well. You never think about, outgoing referrals from Costa Rica. And, just yesterday, I'm placing outgoing referral, opportunities with people in Virginia and people in Maryland and people in Colorado. And it's, again, we're in the business of connecting people and helping guide people through what as realtors, we think of real estate as just such a daily routine. I don't want to say it's monotonous because it's never monotonous, but
never.
It's so common and repetitive for us. And you forget it's one of the most stressful things that anybody buying and selling homes for most of our clients is, one of the most stressful things they'll do. And having that personal ability to put someone in the hands of somebody else is just invaluable.
Yep. And the best agents out there, I'm telling you, they have a way of easing their clients' pain, their mental pain throughout the process, connecting them with everybody they need to be connected with all the way through. And that's the power of Realm Global. So let's talk a little bit about Costa Rica, right? Because I'm fascinated by Costa Rica. I think it's probably one of the hottest up and coming places. Definitely in the Western Hemisphere. The developments that have been happening over the past several years are just, we're just hearing more and more and more about it, which is pretty wild. Where are these investors coming from? Who is being attracted to Costa Rica and why?
Well, it's a great question. So Costa Rica's, I've been here for almost 30 years now. And so there's been a tremendous growth trajectory over this 30 years. It went from being a backpacker, quiet place where, kind of just thrill seeker and adventure people were looking for. And now we've kind of really turned the corner into what I think is a global leader in ecotourism, in sustainability, and then also just in retirement, passive income, diversification of people's portfolios, which we're seeing a lot more of now. If you ask where our buyer pool's coming from, the vast majority of our buyers, probably 75 to 80%, are from the United States and Canada. We are seeing an influx of European and then South American and Latin American investors in Costa Rica as it starts to become a little bit more of a global hotspot. But the proximity to the United States and Canada, the fact that we're always in a generally speaking the same time frame, the air flight to get in and out is really accessible. And so it makes for a lot of that, North American populace that's looking for a tropical destination, looking for a culture experience, looking for something different. When you start to look at where you can go in the world, it's usually talking about big, long travel, time zone differences, expenses, and the ease of the access to Costa Rica combined with kind of its history make it a real hot spot for our North American, particularly U.S. and Canadian buyers.
Wow, very well said, Scott. Like, what are these properties that they're investing in? Is it second homes, or is it like rental properties or commercial properties? Like, what are the hot investments right now in Costa Rica?
Yeah, I mean, what I would tell you is it's becoming more and more diverse. It used to be a second home market for the most part, and I would say that most of our clients are still doing, second or tertiary homes that they can use that are also sustainable rentals. As our luxury market emerges, I would say that my first 15 years in real estate was all about investment. How much is it going up in value? What are the ROIs? How much is the rental? And that was really common probably for about 15, 20 years. We still have that marketplace, and it's still very popular. Airbnb rentals, vacation rentals, as tourism grows here exponentially, there's a very strong rental and appreciation market here. But we're also seeing more and more end users who aren't necessarily interested as I would say that we're a relatively young luxury destination. The top part when I'm working with people in Realm and LRE, they say, Scott, send me a listing, but it's got to be over $3 million. A couple of years ago, I was searching for listings to send to qualify to go on these international platforms. Now we've seen a real emergence and growth in that luxury market. And I think those buyers that represent a changing demographic. They're people that aren't buying because of an ROI. Some rent, but rent passively. Some simply don't rent, but they're now buying because of infrastructure, more polished development management, some of the amenities. And that's probably the newest thing we've seen in Costa Rica in the past 5 years is, the explosion of properties, the Discovery Land Company, Four Seasons, the Waldorf Astoria, Ritz-Carlton Residence, St. Regis are all now coming to become players here. And that's our newest portion of our market.
Wow, that's pretty intense. So, what about the most common mistakes that you're seeing these investors coming in and making, right? Because it sounds like you got a pretty good flow of investments, and before I ask you this question, I got another question that came to my head. Out of all of the deals you do, what percentage are people from out of the country investing? What's that percentage?
Well, in my coastal markets, so we have office up and down
Yeah,
the coast, and it's probably 95% international investment.
95%.
We have offices in the Central Valley, where more of a traditional urban marketplace, where I would probably say it's 75%, local or international expats living here, but kind of
Yeah.
just working in the same ecosystem. When you talk
Okay.
about what are the most common mistakes, I think the most common mistake that we see international investors make is Costa Rica is a small country. And in the United States, especially, people are used to, the east coast of Florida, how different can areas be? Well, Costa Rica is small in size. It is tremendously diverse in terms of ecosystem, climate, infrastructure, accessibility, tourism flow. And so what I think a huge mistake is people have a friend that invested in one part of Costa Rica, and then they'll reach out to me or my real estate team and send me links from 5 different areas trying to compare those things. And while it's small, I tell them quickly, look, that's like looking at an apartment in Rhode Island, an apartment in New York, one in Austin, Texas, and one in Arizona. While it's hard for them to believe that in such a
Yeah.
small area you can have that kind of diversity. And so one of the things that our firm was kind of founded on is we own and operate our office up and down the coast, is we're able to guide clients through a macro to micro level process. I love when we have clients that are super focused. They've been coming for 10 years. They know their spot in the world and they want to be in this part of Costa Rica. But for new investors, I would tell them, make sure you go through that macro to micro level process. Finding the right area is more important than the right property, because once you're in the right area for your goals and vision, finding the right property is easy. The 4 walls are the simple part of our job. It's all of the other cultural, contextual, infrastructure, climate things that you can't change, that we like to make sure we guide our clients towards reviewing before they make a decision.
And I think it's when you're visiting a place like Costa Rica, I would imagine when somebody is linked up with you, that you'd probably give them different places that they should go see, depending on their lifestyle, and what they like to do, what type of people they like to be around. You might say, hey, you know what? You want to be closer to the beach here. If you want, more tropical, like, or more like rainforest vibes, you go here, more small town. So I would imagine you guide them through all of that too.
You got it. We get some people that are resort people and they want to come to Costa Rica, but really what they want to be is in a big gated community. They want golf, tennis, beach access, beach club, and a finer setting. And they're not really interested in going to the local bar or going and have a real local experience. I have other people that don't want to come to Costa Rica unless they can have that. And if you put them in a big gated community, they'll feel like, I could probably just do this in Florida. And I used to be a little more cynical when I first got here because I lived in a small town and I was trying just to sell my flavor of ice cream. And I remember I had a dear friend that came and I was trying to tell them about how great this little community where I chose my lifestyle to be in. And I remember her saying, this has been about 20 years ago. She said, you know what? You don't have to hate my life to love yours. And that really represented a switch in the way we do our real estate, which is we try to listen to our clients, understand what they want out of their Costa Rican experience. And then the great thing about this country is there are these different flavors. And you can still have that pura vida, that laid back, great vibe here, but you don't have to have a watered down version of what your cup of tea or your ice cream flavor is, because there's such unique diversity up and down the coast and up in the mountains.
What a great lesson, right? Like I've learned so many lessons along this job can be super humbling sometimes, right? And wow. So what she said to you was, she said, you don't have to hate my life to love yours. Is that what she said?
Yeah.
Wow. Immediately that hit me. And I'm like, wow, that puts things into perspective.
Yeah. It knocked me off and I'm usually defensive. And I realized that in sales, it's something we often all try to do is say what we've got to sell is better than what you've got already.
Yeah.
And, when with all of my agents, that guiding principle of just decide what's best for your clients and lead them to it. And that's allowed us to grow organically without having a big brand name or anything else. And it's been kind of the recipe for our success here.
Scott, you've done very well. You've got a successful career behind you and ahead of you. You got a lot of trajectory still. There's a lot of real estate agents that are listening that are either in realm or outside of realm that are always really working to be the best that they can be and looking to grow their business. What is the best piece of advice that you could give them to grow their business?
For me, it's really simple. The connective tissue of realm and making yourself bigger than your market. As realtors, we always tend to focus on, these are my 5 listings. This is what I'm going to sell. I'm always selling Costa Rica. And we forget that, most of our clients, most of our friends, they don't have trusted real estate advisors. Again, because for most people, it's a once a decade or once a lifetime transaction. So it's not like you got your dentist that you go see every month or you've got your banker you go see every month. And we assume that people are going to come to us because we're the best. And so if there's one thing that I encourage my agents and I would encourage my colleagues to be doing is you need to be letting all of your sphere of influence know that you can help them with their real estate needs anywhere at any level. And you can do it with the best of the best. And then that introduction, it's not self-serving. It's serving the client. Because if I'm going to go into a real estate office and have to start my cold call interview of a realtor versus if I send you a client and I met Scott through Realm, I'm held accountable for the way I treat his clients through Realm. Those clients are going to get the best service. And it's, as a realtor, I'm getting a referral for sending a client. But more importantly, my client's going to walk in the door with someone who goes, I respect you. I'm going to take care of you. I know where you came from and I'm accountable for the way I manage you in a network of the best. You can earn so much money and add so much value, which is probably more important than the money. If you add value, the money comes by really leaning into the fact that you can service people everywhere.
Well said. Very, very well said. I couldn't agree more. Awesome advice. Scott Cutter of 2 Costa Rica Real Estate. You can find him on scottcuttercr.com. Again, scottcuttercr.com, or I can make the connection for you as well. Great stuff, Scott. Thanks so much for jumping on with us and for being a great Realm partner and an awesome guest here on the Wealth Architect podcast.
Honored. Thank you.
You're welcome. Hey, thanks for joining us on the Wealth Architect podcast. If you loved what you heard here, make sure you subscribe to all of our channels, YouTube, Spotify, SoundCloud, anywhere where you can find this podcast. Make sure you like us, follow us, and connect with us. And let us know if there's somebody you want to be featured on this show. We're always looking for top talent to share and learn how to grow wealth together. Thank you so much for tuning in. Thank you to our entire production team over here, Lucas, AJ, Nora, Casey behind the scenes, all of our guests, and you, our listeners, so much. Thank you. God bless you. We'll be back here learning how to grow and create wealth on The Wealth Architect next week.